to our webinar. The title is Unlocking the Full Potential of Real-Time Payments. It's time to start sending. So one of the things I want to mention, obviously, we want to thank you for being here. We know that there's many things that you could be doing during this time, but you chose to be here. So we're really hoping that we're going to meet our objective on providing some nice information, not only on what's going on in instant payments, but really the opportunity which we starts to send. And we know that's really time, and that's a focus of what our discussion is. Walker Group Events continues to have webinars like this around payments, banking, fintech, a variety of different topics. I urge you to check our website, which is thefintechvirtuallunch.com. I'll post it in the chat. As things come up, you have ideas or topics or questions, feel free to use the chat as well. And I'm going to turn this discussion over to CJ, who's going to introduce the panel, and we can get started.
Wayne, thanks very much. And good afternoon, everyone. Thanks again for being here. I'm really excited about today's session, and I think you all are going to, really get a lot out of it and learn a lot. We've got a great panel of seasoned experts here who are going to go through a series of questions that we very carefully put together that I think is going to give you a lot of, very useful and thought-provoking information to consider, really no matter where you are in your real-time payments journey. But of course, the focus of this panel is on send. So with that being said, what I'd like to do, and I'm just looking around, Wayne, do we have Cheryl coming?
I think she's going to be joining. She's been having some difficulty. So what we're going to do is that we're going to start. We'll all chime in.
Just keep going.
Yeah.
All right. Great. So in absentia, as I introduce the panel here, let me start with Cheryl Gers. Cheryl represents the Clearinghouse, and she is their real-time payments product manager. She'll be joining shortly. We're very excited to have her and to hear from her. We also have Rich Dooley, who's a senior treasury sales officer from Fifth Third. Thanks, Rich. And of course, we have Wayne, the founder and managing partner of the Walker Group. So I think what we'll do, Wayne and Rich, as we wait for Cheryl, let's go right into the questions. And then when Cheryl joins, we can, jump back to some more background and overview information if we can. Rich, let's start with you. I was really appreciative again of some of the thoughtful and thought-provoking questions that we put together. Let's start with this guy. I think we all collectively understand that and collectively feel that, we want to see send go a lot farther. We want to see many more banks on the networks. What do you think it's going to take, or, what can we do as an industry to get more banks comfortable sending? Rich, what are your thoughts there?
Yeah, I mean, it's a good question. It's an important question. Really, one of the reasons why it's important is because obviously we want the networks to grow. The more banks we have in the network, the more DDAs there are that can be reached in the network, whether it's the clearinghouse or it's FedNow, which continues to develop. And I think we'll see more of the smaller and community banks probably jump into the FedNow side later this year and the next year, probably in the next couple of years, most likely. So that should increase the overall network size of what we call the generic term of real-time payments. And obviously, it's going to depend if you're with the clearinghouse or with the FedNow or both. Mm-hmm. But again, it gets to that point where the growth of the network is very important. Obviously, we've seen a lot of use cases develop. We continue to see those develop, and part of that is not just rest with the banks, particularly the smaller banks at this point, because all of the large banks are in on the send side primarily. Obviously we are, all the other large super regionals like us, all the big boys. We're pretty much in the network. Those smaller mid-tier banks, the community banks, we want to get them but their customers have to obviously see use cases and want to be able to utilize this payment method. And so it's not only incumbent on banks to kind of build what they need to do to get into the network, do all the testing, whatever they need to do, but also educate their customers. This is what's happening in real-time payments. This is why you might want to utilize it. Back early on when we were just kind of getting started with real-time payments, whenever I was at a client meeting, I would always say at a certain point when, kind of the main part of the conversation was getting through, I would ask about real-time payments. Are you familiar with it? What do you know? Have you heard about it? A lot of times at that point, it was don't really know anything about it. And I always would say to these customers of mine, listen, you don't need to do anything now, obviously, but at some point, you may very well be asked to make a real-time payment or to send one in one format or another. So it behooves you, the customer, the corporate, to know what this is. If you think it's useful, if you see a use case scenario in your overall payment spectrum, you got to talk to your bank. Have that conversation. Hey, do you guys offer this? And things can come up really fast. You never know. A few years back, we had a scenario at the bank I was at the time, and we did have send capabilities, but we had a real estate company who had a contracting arm, and they were getting supplies in. They were down in Texas. They got supplies in unexpectedly on a Saturday, right? And the supplier wanted to be paid. And so I think we'd had one of these maybe interbank webinars or something a few weeks earlier. And the guy called us up and says, hey, tell me more about that real-time payment stuff, because these guys wanted to get paid on a Saturday and we couldn't pay them. Now there's a lot in that, obviously, that comes under the banner of 24/7, being able to make a payment on the weekend, which is a whole entire subject in itself. But the larger point is, as a bank, we could have a conversation with that customer of ours and say, well, yeah, we can turn it on for you. Let's get some things going. Let's ask some questions. Let's check off a few boxes. We've got kind of a scorecard that we want to go through. But yes, we can provide you with the send capability. We have it. And I think banks that aren't in the network or trying to get into the network or are thinking about getting into the network need to think about that. You're not going to replace all payment types at all with real-time payments. ACH, probably not. Checks, maybe. Wires, there's a definite game plan there and some other areas. But it's definitely worth to have this capability to offer to your customers and to help really grow the network.
Yeah. That's a good point. CJ, when I think about that and kind of working in the third-party service provider space, really working to help banks enable with regards to send, I think one of the things, as was mentioned and what Rich said, is being comfortable, the education. But the big concern is that some of the banks, since it's very new for them and they're really concerned with risk, exposure, fraud, all these different pieces, they need to understand what that looks like and what can be done to mitigate. The other aspect is to really have processes in place so they fully understand the back office operations and so forth. We're finding and working again very closely with banks through a third-party service provider. We see some resistance, some hesitation, but this is an excellent point of what you've mentioned, Rich, is because the need for education, basically handholding, so they can feel comfortable and maybe take small steps before they can take bigger steps and start running.
And there are, to your point, Wayne, there are these providers out there who will help the smaller level banks. Fifth Third, the PNCs, KeyBank, the super regionals and the large banks. Obviously, we're doing a lot of it with our own resources, but these third-party resources are available out there, to help the smaller banks that don't have maybe the personnel or the technological know-how to do it. So there's really no excuse not to be in the network.
Yes.
Yep. And thank you both for that answer. And that was really a great segue, gentlemen, into our next question, right? So we started to talk on service providers, and we know that there are a number of them in this space who will basically enable connectivity between the banks and the networks. They will also do things like provide advisory on, how do you need to revamp everything from operations, the customer servicing, the client experience to risk management. How do you adapt holistically as an institution to functioning, right, to operating in a real-time environment? So Wayne, I'm going to start by directing the question to you, right? Since you, of course, your company works with a lot of third-party service providers and fintechs. When a bank goes out and they're looking for a partner, to enable connectivity to RTP and FedNow. What approach would you suggest to evaluating them? What are the criteria? What are some of the things to watch out for that, that you've seen and you talk to your clients about?
Well, that's a good question. One of the things that's when you look at the third-party service providers, many of them are very similar. They do provide very much the same capability, the same solutions with regards to what they need to do to enable a bank to become enabled for instant payments. But one of the things, if an organization is in the pursuit of a third-party service provider to really kind of build that checklist of what's necessary, understand how that third-party service provider is going to interpret and educate with regards to compliance. What process are they going to follow with regards to that? Building out that project management to engage what that looks like as far as how the relationship that they have with the clearinghouse, or whether it's going to be FedNow, to making sure that they understand the file formats, that they can all these different aspects that they need to understand. What use cases are you going to solve for, and how that third-party service provider can help with regards to that bank and how to handle what those use cases are. What type of integration is going to take place? That's going to be necessary. This type of relationship is handled almost like a jury. So operations, fraud, product, sales, everybody kind of has to be on the same page. And that third-party service provider has to make sure that they're going to be able to provide those individual groups of that bank what's necessary. What is it that they're going to need? I think that's going to be understand that as far as the identification of a third-party service provider. And the other piece is realizing that this is a project that can go on for a long time. It's nice to kind of think, they RFP it most of the time that this is going to be, a project for a couple of months. 9 times likely, that's not going to be that's not the place or the situation. It's a long project. The stakeholders at the bank, as well as at the third-party service provider, have to be on board, and it's really kind of how they're going to move things together. So that's one of the things in which I've seen, and understanding the landscape of the third-party service providers that compete, making sure that it's not much with regards to how they differentiate, but it's really the relationship and their approach.
Yeah, no, that's great. Thanks, Wayne. Rich, let's jump back to you. Let's inject some ISO conversation in here for a moment, because we know we have Swift going to ISO later this year, right? And I think with that in the backdrop, something I wanted to ask you is, of course, FedNow and RTP, are speaking that language, if you will. So with that being the case, do you feel that real-time payments leveraging ISO 20022 is going to attract more usage?
The answer to that is yes. I'll say yes, but obviously it made all the sense in the world for the real-time payment rails to be ISO enabled, because the world is going to ISO 20022. And as you mentioned, we've got the Swift MT to MX message conversion this November.
Yeah.
And no one's going to be surprised about this. That is a topic all in itself. And that topic is something that a lot of corporates still aren't very in tune with. Now, if you're a large multinational, you're doing a lot of overseas business, things like that, you're a big user of Swift, you most likely know about it. And some of those international banks, Barclays, HSBC, those kind of names, have been helping their clients, with this conversion for quite a while. But still, the standard middle market company in the United States, the ISO 20022 question really isn't going to go very far, because they're just not familiar with really what it is. Yeah. Having said that, being ISO enabled absolutely helps, because I think when we continue the education, when we talk about the advantages of real-time payments, and it's going to be very use case specific for everybody. It's not going to be across the board. But when we talk about the specific use cases and bring that education, the ISO factor is one other thing that we can talk about. And we can talk about it in terms of
Go to webinar.
The clarity of the message, the structure of the message, the value of the data in the message. So if you think, for example, if you're a corporate or whatever, and you have a world of suppliers, right? You've got some strategic suppliers, got some other suppliers, and you're thinking, I might utilize real-time payments for these particular suppliers over here. Maybe they're, let's call it your tier one suppliers, right? You do a lot with them, you exchange a lot of information. Maybe this is probably getting a little ahead of where we're going, but if you're thinking about something like a supply chain finance or dynamic discounting, maybe you want to pay with a real-time payment on that 10th day or something like that, or you want to just stay with terms and just pay on the 30th day instead of sending a check a few days before and ACH a couple nights before. And you want to share really valuable information with that supplier. The ISO 20022 factor allows that to happen, and it's going to be deeper and more structured and better information than you're sharing now. A couple of years ago, when I was doing a lot of work with the ANSI X9 group on writing this market guide for ISO 20022, this is some of the stuff we talked about, and we kind of put a model in there for corporates to use, along with their ERP providers and everybody else that's kind of in the whole chain of the trading supplier network. Who you want to share data with and how much do you want to share? Tier one, tier two, tier three, tier four, whatever it might be. So when you think about, for a corporate, if you think about your suppliers from that standpoint, you're like, yeah, I wouldn't make a real-time payment to any of these suppliers over here, but these ones over here, maybe it's something like in the last financial crisis, you had some of these suppliers who were really running super tight and they needed to get paid right away instead of the 30 or 60 days. If that ever happens again, now you've got a real-time payment rail where you can maybe make that happen. And you want to share valuable information. So we can have the RTP conversation and then kind of slowly bring in the ISO factor and tell them what that valuable data will do and will help. And hey, and basically by saying, hey, by the way, in this rail, you can do this. And it's really great information to share. So it's kind of another reason to use, another kind of feather in the cap of real-time payments. So the long answer there was yes, but it's going to take more education, more discussion. ISO, again, is a whole nother topic, but, I've been trying to bring them together for a while. I have to continue to do that. And, I'm not trying to blow any minds of the smaller banks who are just like, what are you talking about? I mean, I don't even have send yet. You're talking about some 3-letter word and numbers. I don't know what's happening here, but that's part of the conversation. I think it'll be valuable to add.
That's great. Thanks, Rich. And thanks, Cheryl, for joining. Folks, we have Cheryl Girls, excuse me, the RTP product manager from the Clearinghouse. I'm going to jump on and do another segue into smaller banks and hit you with a question, Cheryl. And the question is, when we think about, the smaller banks getting onto the networks, why aren't we seeing more of them jump on board? And what do you think that we can do collectively to make that happen? I think you're on mute, Cheryl. I think you're still on mute. There we go.
Can you hear me now?
Yes.
Finally. I think the one word is change is hard, right? I mean, if you really look, into what is preventing, it's a behavioral change. And there's no mandate. And so I go into work every day and I kind of like my life as it is. And now you're asking me to do some big thing that's scary. And how to try to get the attention is probably the most important things. All of us in this industry know how busy everybody is, and trying to get the attention of a champion. At many of these banks, they have multiple hats, and it's taking longer and longer for them to really put it into their line of sight. They expect customers to come in and ask them for it. And that doesn't work, right? I mean, this isn't a mandate in the United States. Someone's never experienced anything, they're not going to come in and ask for it. There's a lot of supply of ways to make an instant payment. There's 2 rails. Well, how do you get the demand? The demand needs to be driven by the banks. The banks shouldn't expect the demand to come from their account holders. Some will, and those are the best case situations, but we're all advocates and we all have to be promoters of what a great experience this is and how it's changing payments in the United States. So I think from the small bank, it's getting, there's 8,000 of them that still aren't on the network. That's a lot of banks. You forget in the United States that we have over 9,000 financial institutions. And when we look at sort of community and credit union banks, I get frustrated. They're probably the easiest thing. There's so many options. There's so many third-party service providers. They're core providers that just need to, change a dial. It's not the biggest problem. They've got people to help them. But the fear of the unknown is driving, from my perspective, too many non-participants. I think it's got to be the fear of, and this is, I'll show my age here. What is it? The fear of not being part of something, fear of not being involved. We've got to change their. Go ahead, Rich, I can't remember what it is, but that's what we have to get to them to understand that they want to be part of this. They should be rushing and knocking on the doors of their third-party service providers, their core providers, and giving their customers something new. Every customer loves when a bank gives them something new, and in this case, such benefits to their customers to get their money quicker. Who doesn't want to get their money quicker? And then giving them an option of sending their money quicker when they have an emergency payment to make, when they want to get their loans. There's places they want to move money between their bank accounts. They don't want to wait 2 or 3 days. They don't want to wait for a wire to be posted because it goes through a correspondent banking. So I'm babbling, but I really have talked to thousands of banks in the last 5 years. I don't understand the hesitation. Maybe I'm drinking too much Kool-Aid, but I need to hear that many people.
Sure. We had a question coming from the audience that I think is an interesting one and may touch on this a little bit. That I'll read off, and anyone who wants to jump in, let's just handle it that way. I certainly have a thought on this. And the question is, are banks struggling with prioritizing RTP send over continuing to push legacy payment origination capabilities? My thought is absolutely. I've seen a lot of that with the card-heavy banks because they don't want to, they don't want to mess with that card revenue. Other thoughts from the group on that one?
Yeah, I'll follow on, and I'll follow on to what Cheryl said. The answer to that, I think, is yes. For some banks, for sure. Do you have the demand? Like, to Cheryl's point, is the demand there? And the answer is probably no, to her point, because the bankers have to really drive this. But then, I don't know if you saw Seth's comment, which is a very good comment. Many bankers are afraid to bring it up because, it's a competitive issue, right? The only time, I would say, Seth and everybody else, the only time I remember a customer coming to the bank and saying, tell me about this RTP stuff, was the example that I gave before about the customer who had this issue on a Saturday getting construction material delivered. But we had already put it out there to him and other customers that we have this capability. So I've had plenty of customers over the years when I've talked about this, I've just point blank said, not interested in paying anybody faster, just not interested. But I also think what it comes down to is the lines of business that the bank is in. So for example, if you have an embedded payments offering, right? So, we obviously have the Newline group here, a big embedded payments offering. We have money transmitters, we have payment service provider clients. If you're the kind of client that is paying a merchant, for example, or if you're in the world of gaming, for example, right? This is a must have. You got to absolutely have the offering. So and I know some smaller banks are in that space. Some of the key embedded payments banks are those smaller banks where a lot of the big fintechs kind of started their banking. So they absolutely have to have this offering. Also, if you have a lot of if you, for example, have a lot of insurance carrier, right? If that's a line of business, you got to have this so they can make those emergency claims payments. If you're doing business with a good amount of payroll companies, we have a lot of payroll clients. They want to offer this. I mean, it's not going to be their main payment rail. They absolutely want to offer this because they know the the payroll company down the street that they're competing with is offering it as well. And there are some other lines of business, maybe if you're a smaller bank or maybe if you're a larger bank and you have, clients that are part of maybe the gig economy. This is where we've seen these early use cases where you're paying out folks that want to work. I'll tell you, it's interesting. I had this experience not that long ago on the consumer side. Actually, I bought a vehicle, right? I went up to the Nissan dealership. I'm buying a new truck. I'm going to throw down my card for the first few $1,000, which I was excited to do to get those points. And I'm like, I wonder if I could make a real-time payment to pay off the rest of it. And I do banking with a large regional bank, and I called them up. I called the branch, and they had no idea what I was even talking about. I'm like, that's a miss on the consumer side. So even some of the larger banks who really focus on the B2B side aren't bringing it yet to this C2B side. So if you have a lot of that exposure in terms of clientele, you really need to think about it. So RTP is use case specific. For the banks, it's line of business specific. You're not going to have, I don't expect anything to change with the world of corporate, small or large or medium, banging on the bank's doors and saying, give us this real-time payments rail. We want it. We got to have it now. Unless it's a certain line of business that really wants to offer it to their customers. And that's how I've been seeing it. I think that will continue to be the way it is for quite some time. So to Cheryl's point, again, it's incumbent upon those banks to go out and educate their customers and say, listen, you probably need this as an option because it may come down to somebody asking you to make one, you want to receive one. And if you don't have the capability back to Seth's point, they might say, well, my other banking partners do. So I'm gonna push these payments over to them.
Yeah, thanks. Great point.
And
Yes, sir.
I'm going to jump in if I can. You can hear me, right?
Yep.
What does a bank do? A bank takes in deposits, makes loans. Every bank has the same. And they do that as a core competency is payments. They're the payment providers. And they provide product for new loans. They go out there and they drive a demand for their home equity. They come up with a new home equity offering. They come up with a new personal loan. They do marketing campaigns, right? I think many of these banks forgot how to do it in the payments realm.
Yeah.
They are so used, they haven't had a new rail in 50 years.
Yeah.
They're sitting there and they're making the donuts. They're not focusing on that this is a infrastructure that permits them to have a new relationship with their customers who are moving into the digital commerce realm, away from paper, looking for more, but their customers don't know what more is. They expect their banks to come up with products and marketing campaigns and education campaigns. And if a bank is sitting in on the sideline, they're going to lose business. Anecdotally, I have heard specifically about end users, consumers, big drivers that leave their banks because they can't receive the payments that their friends are getting from different banks. So they're walking across the street. If you're not in it, your customers are not receiving the services they expect from you. And if you're not giving your customers the right level of service and products, then they're walking to your competitor. And you have to still remember about product development. This is so exciting on what you can do. Everyone talks about, receive a payment. Oh my goodness. As a SendBank, as an ex-product manager, okay, you got debit blocks, you got positive pay, you've got all of these products that you get fee generating revenue from on your ACH channel, your check channel, your wire channel. Guess what? You now have a new channel to develop new products that can drive new fee revenues. Go do it. You know what? Most of the large dispersers on the network that are driving the volume, their customers are making a way to monetize an instant payment to their customer bank. Banks are like, wow, they're making more money than we are. Yes, because they're in They understand their customers. They're finding a way. They're seeing that instant is a way to monetize. People will pay for instant services if you design the right products for your marketplace at the right time.
Thanks, both Cheryl and Rich. Appreciate that. I want to jump around a little bit and Wayne, go back to you again for the service provider perspective. So I think, when we started this conversation, 10 minutes ago, 15 minutes ago, we got your perspective on, how do you evaluate a fintech and selecting a provider to help enable the bank, right, for real-time payments. So let's talk a little bit more about, how the bank moves forward from there through the implementation, right? So, once a bank has selected their service provider who's going to enable them to, to get on the RTP and FedNow networks, understanding the inherent complexity of the project, right? And how, there are so many different functional areas of the bank that need to be touched as part of this transformation, really, right, to running in a 24/7 environment. What can the bank do, in working with that partner to ensure a smooth implementation? And, what are some of the obstacles, some of the, the red flags, if you will, that they need to watch out for along the way?
I think that's a good question. So one of the things that I see, and some of the challenges, just like there's opportunities, is that a lot of times the bank has to mobilize their team, their individual groups in order to be ready. An implementation takes time, but remember, many of those at the bank have their day-to-day responsibilities that they have. So whether it's compliance, whether it's operations, whether it's product, whether it's technology, these are all going to be the stakeholders, but they have their other day-to-day jobs that they're doing to grow the business in their day-to-day assignments, their work. Now you have something new. And that becomes a new project. So some of the time could be just as they ingest or partner with the third-party service provider, they have to take on more work. And they have to also be educated of what that's going to do, because a lot of times it's kind of figuring out what they need to do within their own group in order to partner and go through an implementation process. So that's another project that takes time. The other point is, who's going to be responsible? Who is responsible to be that point of contact for the third-party service provider, who also has their day-to-day job to do? And once that party is identified, they have to still sell that within their financial institution and in their bank to make sure that there's going to be resources that are going to be available in order to move forward. So that's one of the things that I think I see consistently as an opportunity for banks as they work with their third-party service provider to kind of be in tune and to be in sync. The third-party service provider has done this. They're going to know what they need to do. They're going to have to integrate with the core. Somebody's going to have to be responsible for that on the bank side. So these are all the moving parts that need to take place. So it's really good project management 101. It's having the people in place at the bank that are going to follow through the meetings that need to take place. And consistently what I've observed is that that's an opportunity to, as we continue to grow, that this is going to be even better as time goes on. So those are the key points that I see in summary. I don't want to take too much time on that side, but that's really what I see. The other point, CJ, I think there's some comments and questions from the chat as well. But I don't know if Rich and Cheryl have any thoughts of what they see about that. But I certainly would like to see this kind of continue to kind of work out make the adjustments so that's going to be a smoother process. But I think that's just going to be a matter of time.
Yeah, we can't hear you, Cheryl.
What you're saying is the third-party service provider is a strategic partner. Work with them they're not a vendor. They're your strategic partner for a long-term relationship. And make sure you pick the right partner and realize that the two of you are collaborating and it's a partnership. You're not just buying a service. They're helping you. There's so much education available from your third-party service providers. They hear and they have best practices across many of your peer banks and help you educate your internal stakeholders, and they probably heard questions before that they can help you shepherd conversations forward in a positive manner. And I think the most important thing that what you said, Wayne, is it's a new project. Many of us worked at banks a long time. I used to get real excited when you were put on a new project. I mean, this is the future. It's not like you're in the corner counting coins because someone doesn't have time to do it. This is exciting, and get that team to understand that they're driving, one of the most important topics and the changes in the payments industry in the last 30 years. So be excited, and be excited that your strategic partner is there to shepherd and be a good resource for all of your members of your team.
Thanks, Cheryl. Appreciate that. Let's shift to risk for a moment here. I think it was back in February, right, that we saw the RTP send limit go up to 10 million. So, I think the question that we have, and I'll put this out to both Rich and Cheryl, is when you consider that limit, and you think about the corporate perspective, right? So the corporate client perspective, do we think they actually want some friction in their in their payment processing for larger transactions?
Yes, no doubt. The $10 million transaction limit is attractive. It got a lot of attention when I talked about it with clients. Told them it was coming likely, and then when it finally came, oh, that's very interesting. And it opens up a lot of different doors for this payment rail. But the larger clients that I've talked to about this have a lot of questions around it. When we are talking to a client about implementing real-time payments, we have a lot of questions. We have around fraud. We want to know what if they've ever had payments fraud. Number one, what kind of limitations maybe do they want to put in place? What do they have they're putting in place? What do they want the bank to put into place? That might be around, hey, if a real-time payment attempt is made and it's over this amount, do you want us to stop it? If you tell us you're doing business hours and a request comes through at 5:15, do you want us to stop it? Things like that to handle risk at that moment. But these are questions that are going to get asked, period. So clients do want some friction around it, because this is a brand new payment rail, and so they don't know exactly how it works. They're used to wires, which have a lot of friction, a lot of complaining there, but still, clients are glad to know that it just doesn't fly out the door. And there's some fraud protections there. And I think banks, I know we do it, we're asking the question. I mean, we're asking the question that basically says, what kind of frictions are we going to put on this? In terms of, again, transaction size limitations, maybe hours that you're going to be sending or receiving payments, things like that. Who can do it? So I think, some assumed friction is going to be inherent in the process, because right now, there's still a lot of questions around how is pay verification going to work in 1 second, right? So there was, and I'll let Cheryl discuss this one, but there was an article earlier this year from American Banker that kind of talked about, hey, maybe the market should look to the networks for kind of a centralized risk management or fraud prevention process. I don't think that's happening. I don't know that that's going anywhere. It was an interesting article about that topic. What should we look for the clearinghouse or FedNow to do from a risk management or fraud prevention standpoint? I think that's going to be part of the conversation as this rail continues to gain momentum. It's an important part of the conversation, but yeah, some friction is definitely wanted right now. Europe is much further ahead than we are in this realm. That customer base likes and wants friction. I've talked to my product manager a few times over the months about this, and he's a funny guy, and he always says, of course, we have to have that. The Europeans think we're crazy. We got to have it in here. So it's part of the conversation for sure.
Yeah, managing risk is a bank's day-to-day job. And we're an add-on network. We're not a brand new network. So many of the best practices that have happened across Wire and ACH and should be completely brought into this network. And I also think that people don't realize it's an instant payment from the time your bank sends it to the clearinghouse and we get it to the other bank to receive and back. You know, it could take days in some banks before it's even sent to us. So the sending banks have their due diligence, right? They're the ones that need to do their fraud controls. They have to, you know, it starts with know your customer. They're the ones that are doing their compliance checks, their sanction screening checks. It's an irrevocable payment. No bank would send that without doing their checks and get it to us. So everyone will ask me, oh, I can't get that payment done in 15 seconds. No, you're not supposed to. We do. You get everything you need to do to make sure it's irrevocable. You know, we have $10 million limit today. We have thousands of $10 million payment, over $1 million payments going every single day. Now, does everyone have access to a $10 million? Well, my bank won't give me $10 million, and they shouldn't. And I won't have $10 million sitting in an account, even if I try to release it. So there are very few and specific use cases for dollar amounts of that amount. And there's banks that have their risk management, merchant limits. They don't let certain of us even have those limits. So there's ways to manage the releasing and the determination of who's able to send. On the network, you don't have to send 10 million. But if a 10 million, what is the requirement of the network is that if you receive a $10 million payment, you need to receive that payment and give it to that person immediately. If it's a bad payment, that's the sender bank who is going to eat any losses because they didn't do their work up front. And there's many tools that are used beforehand, right? The risk, the Actimize, NICE, you know, all those tools. But I think the most important tool is account validation. Right? Many banks are doing ownership validation before they're even sending it. So we as the network don't want to get into that. You know your customers. We're giving you some insights. There's some new fraud tools we're looking at rolling out late in the year. We'll give you more insight, but we can't make a decision that the bank on the sending side, and that's part of transitioning to send, understanding what your obligations are as the sender and recognizing who you should give access to send, how your AML, how your fraud queues are going to work. 24/7 doesn't mean you have to give a customer a 10 million payment at midnight if you have concerns about it. You just don't send it. So I think there's a lot of fear of fraud and everything when you forget that we send $100 million wire payments out. You're following pretty much the same parameters as you would with your different payment rails. Faster fraud, you know, faster payments is faster fraud is probably the worst urban legend that you can hear. You know, it's the banks have it's checking account fraud, you know, it can go across rail. You need to know your customers and need to know who you can make a payment on behalf of.
Oh, thanks, Cheryl. You know, let's continue on this risk management topic a bit. And I want to start with you, Cheryl, if I could, and ask another question. And then, of course, you know, Rich, if you want to jump in, or Wayne, you want to jump in as well. You know, so we think about how, you know, again, right, bank is going to be operating in a real-time environment now. You know, when we think about how they manage their, you know, their fraud and their AML and their OFAC screenings, what are some best practices for managing, you know, those risk areas in a real-time environment?
Yeah, the first thing to realize is this is a domestic U.S. dollar payment network. It's not international. It's domestic. So the obligations in our operating roles on the network are really on the sending bank, as I previously mentioned. We do not have OFAC requirements or AML requirements. That's all within the bank as their ultimate requirements. All that is what we're requesting is that they have a risk program in place within their OFAC program to recognize what they need to do for instant payment. So what we see as best practices, again, is that your compliance, your fraud, you're looking at what screening should be done beforehand, who can have access to it. You know, I don't know of any bank that gives anyone access to it if the account's been open less than 6 months. I mean, you need to, and it really starts with synthetic identity, right? That's where the fraud happens. You'll onboard your customers and everything right. When it's time to make the payment, then you can, you know, do your fraud screening beforehand. You're learning every time you send an instant payment, build those models into your fraud algorithm for instant payments, make them stronger every time. That's pretty much it. Fraud on the network, and also I didn't mention, which is probably the biggest thing, we're only a credit push system. You can't do any debits on our network. So all of the control before the bank releases it is the consumer, the business is authorizing that payment. There's no one pulling any money out of any account and debiting your account without you knowing. They're message driven, they're individual message, they're completely authorized by the person sending that money out. And so on our network, we really have authorized fraud, right? It's account takeover, and that's what we monitor on the network. We ended 2024 at less than 2 basis points for volume and less than 4 basis points for value. So it is, you know, it makes sense. Scams aren't as prevalent yet. We have mostly business originators. We're not foolish to think that other frauds might not happen on the network, but we're working on some new tools. But more and more, it's just know your customer, know who you're sending, and know who they're sending. If someone's never sending money out of their account and all of a sudden asks for 500 instant payments to go to some accounts, you might want to take a pause and say, why all of a sudden? Just the normal core risk reviews and know your customer that your AML and fraud groups are on. And then if you, on the receive side, you know, you're making your dependency, that money is irrevocable. You're receiving it from the sender who is validated. And so you're putting the money in the account. There's no use to stop it and take 52 new fraud reviews because the sender is the one who did all those beforehand. And again, in the domestic network.
Let's talk about request for pay for a moment, if we can. You know, I'm curious to ask, you know, both, you know, you, Rich, and you, Cheryl, you know, are you hearing a lot of demand from for it from clients? And if so, you know, what are the popular use cases that you're hearing about in terms of RFP?
Well, how many people want another method to disperse, right? Most people want money to come into them. They want a receivable. Disbursements, oh, I got to give up money. Receivables, so how do you make a credit push system a receivable system? And that's what an RFP does. It changes the dynamics. And on the network, because we are a credit push system, there's only one way to get money, and it's a Paxo-Aid. It's a financial movement of funds. To receive money, there's no direct debit. So a request for payment is a non-financial way that I can go to CJ and I can ask you from a business, it's a business only, I can ask you for $50 because I want to release my goods, and a business-to-business payment. And I'll send an RFP. It's non-financial, it's just a request. It's like an email delivered through secure bank channels in a highly structured ISO message that could be used very richly or very unrichly, depending on the use case. And then you're going to go and you have control and you're going to send me the payment because you know me, you saw it come and you expected it and you send. Very limited fraud. So the request for payment is everyone's asking about it and they're really looking forward to it. And the use cases we have on the network right now, because we have a risk-based approach to roll out use cases, because we want to understand the dynamics for something that's brand new in the United States, even newer than credit transfers. So basically what we have on the network today in production is brokerage. I'm funding my brokerage account. We have some business-to-business payments. We have a government to consumer, a bridge toll is a recent use case. And that's it right now. We're getting a lot of inquiries, but again, because of the risk approach to rolling it out, not all the use cases are open like they are on the credit transfer side.
Got it. Thank you.
Yeah, I would add to that, not seeing a lot, not getting a lot of questions about it, not seeing a lot of interest. We do ask about it if a client is in the process of setting up or has shown interest in setting up real-time payments. We'll bring up as part of the conversation, usually stirs up a little curiosity. But kind of to Cheryl's point, G2C, government to consumer, B2C, the kind of the utilities have some interest there, sending out the water bill or the utility bill, whatever, excuse me, to the consumer. That's really where we're seeing it. Again, the brokerage firms is another good area, where we've seen some interest, but right now it's a subtopic for the broader topic of RTP, but we are having some conversations about it. But and we're setting up to be able to provide that service. So I think again, as more education it gets put out there, customers start to utilize real-time payments. Excuse me. And the rail grows, I think you'll start to see some interest, a little bit more interest there.
Thanks, Rich. Jonathan, are we able to open up the lines, if you will, to see if there are any questions from the audience?
Oh, yes, I think that if you want, we can jump into the breakout rooms.
Before we do that, we can see if anybody has any questions. I mean, obviously, there's a lot of conversation that took place.
Yeah.
So if there's anybody who has any questions that they would like to pose to the panelists, that may be good before we decide to close it off and go into breakout rooms for those who may be able to stay on.
Yeah.
Or they can use chat to answer to raise those questions if we don't want to hear their voice. So they can.
Do we have the I just want to make sure, do we have the attendees off mute?
Yeah.
Okay.
Yeah.
Quiet group today.
Yeah. So it may be a good time for some concluding comments from the panelists. Cheryl, you yourself and Rich, maybe would be quite nice, because obviously as we kind of wind up. No. So do you want to take any concluding comments from the panelists?
Yeah, I mean,
Yeah.
Rich or Cheryl, firstly, is there anything that in summation that you wanted to add?
This is a good topic. It's an important topic that needs to be discussed. I do think the banks that don't have the send capability need to pursue that path. It helps the network. And kind of to one of the points earlier was, you might lose some customers because you don't offer it. And you're going to get, like I told early on, I told my corporates at some point, somebody's going to ask you to make one or receive one, and your bank doesn't want to leave you hanging out there. No, we don't offer that. We can't offer that right now. It's not there. So this is another payment rail. It's something you should have in your umbrella of payment rails that you utilize. It's unlikely to replace to any meaningful degree any other payment rails. Perhaps wire. Wires are pretty expensive, obviously, and a real-time payment could replace that. But for those banks that don't have the send capability yet, I would get it. For the corporates out there who really haven't spent much time on the topic, I would look to understand it. It's pretty basic stuff. There's intricacies with the networks and all the other things that banks have to do. That'll generate questions, some of the fraud stuff we talked about. But I would recommend for corporates that don't know much about it, start learning about it, see where you might have a use case for it. Because even if it's a small slice of your world of payments, it could make a big difference to one or more of your trading suppliers. And again, touching on ISO we talked about earlier, There's really meaningful data capabilities around real-time payments, and that really could assist you in things like reconciliation. So there's efficiencies to be gained. There's advantages to be gained by knowing what this is, knowing how to use it, knowing where you might want to use it, and having a banking partner that offers it.
Got it. And Jonathan,
And I would just end by saying,
Pleasure.
RTP is the first rail in 50 years. I think we've become too accustomed to our legacy processes. We did 35 million payments last month, 24/7. We have 60% of the money moving after traditional banking hours. For a business, for a consumer, you never have to worry about a deadline. You can just go to your bank mobile or whatever and make a payment any time of the day or the night. You're not dependent on the doors of when your bank is open. It brings so much into this digital economy when everyone's expecting everything instantly. And when you start using it, you can't not use it. And banks, it's a very competitive environment today in the U.S. banking industry. And if you don't have it, you're at a competitive disadvantage. This is table stakes now. It's no longer a strategic decision. You need it. There's choice. There's payment strategy. We never expected that this rail would be a lift and shift. It's an add-on. It's for fit for purpose. When you want to enhance your business model and bring new opportunities to your customers or bring back office efficiencies to lower your prices, especially with the market that's going on and everyone's looking for productivity gains, RTP will give it to you as a banking, because the bank as a disperser is just as important as a corporate as a disperser. Think about all those escheatment of checks every bank does. You shouldn't be doing those. You should be sending them by RTP, and you should be finding ways to lower your operating costs and provide more and more opportunities for your customers as a partner to bring them value in their day-to-day money movement activities.
Thanks, Cheryl. I do see a hand up from Joe Carcutt with a question. Jonathan, if we could unmute.
And while we're doing that, I know Lauren had a quick question here. Lauren, I'm not aware of any lawsuits. I've been in a couple different banks throughout the time that RTP has come to market. I'm not aware of any lawsuits. Maybe Cheryl is, obviously with TCH, but I'm not aware of anything that I've seen anywhere.
Not at all. Again, these
Yeah.
payments are authorized by the person sending them. So very different. There's no dispute. I hear all the time, what's the dispute process? It's an irrevocable payment, people. There is no chargebacks.
Right.
Okay? There's no ACH 90 days later. Those are the values you're bringing to your customers. So no, and if there is something, it's outside of the network, would be arbitrated. If someone got $10 million by mistake and wanted it back.
Thank you both. Joe, what was your question?
You may have to type it.
Okay. Let's see here.
He's typing it now, looks like.
I'm gonna type it, yeah.
As he types the question, one of the things that I find quite interesting as well, on just on the opportunities, I look at this as how we're all part of a community that we're building. I was involved in home banking and bill pay back several years ago. Cheryl was involved in that back in the day, and that's how we met several decades ago. What's interesting, though, it was a community back then, right? So everybody kind of knew each other. We kind of grew this together as far as home banking and bill pay. It's a commodity. It's commoditized. It's definitely table stakes. But what we're doing today is really the same thing in the way that we're building a community. A lot of those, even on this call, are very much involved in the center. Those that are listening to this webinar are building it. They're strategizing what they need to do, realizing that we are all on this call. We are all part of a community. So we have access to each other to help figure things out. We see each other at conferences. We see each other at webinars. Don't hesitate. Don't feel awkward in regards to reaching out to someone in your network, someone here. to ways that we can leverage opportunities and build together, because we're building this together. We're building this community together, and we'll look back decades from now and we're going to say, okay, we all did this together, right? We shared our successes. We shared the things that our challenges, but we learned from it, and eventually, and we grew this. So this is the time for opportunities, build out those within our network so that we can share and grow together as an industry. Oh, here's Joe's question. Okay.
Here we go. Let me read it out. So question from Joe Carcater. So I'm with a smaller FI that is not a consumer bank. However, our new CEO is focused on table stakes for the commercial space. Is RTP growth generally being seen in the consumer space or the commercial space?
80% of all payments on the network every month are originated from a business account. So I think that, and that has been steady for probably 5 years now. So the business bursars are driving, and there was 295,000 unique business originators on the network last month.
Thanks for that,
So
Joe.
there's
That's
a
great
lot
insight.
of people in the United States, you know, and a lot of those are, you know, using the Treasury Online, the emergency payment, I think Rich mentioned. So they're doing maybe 5 payments where there's other people doing 10,000, other people doing 1 million, 5 million. So it's across the board, but people are on the business. I feel sometimes they're finding it in spite of their bank's marketing activities. They don't even know. Banks haven't even told them it's available on their online banking portal, but they're finding it themselves. So yes, commercial banks, you can monetize and find a way to your HOAs, your title companies, your trucking companies. There's so much factoring going on here. You know, many different places on the commercial space besides traditional vendor payments.
Thanks for the question, Joe, and thanks, Cheryl. So we're at about 5 minutes past the hour here. You know, I think as we think about wrapping up, since it doesn't seem like there's an ask for breakout, are there any final questions from the audience that we can answer?
All the participants, whoever, not bankers, need to go to their bank right now and say, I need real-time payments. You got to get into the network. I need it. And I think also, just to throw this out for the bankers that are on here, particularly the smaller banks. I mean, I've had a couple of friends of mine at smaller banks reach out to just ask kind of what we've done, what we're doing. You know, I think there's some level of sponsorship that the banks, the bigger banks that are in the network, can maybe offer to the smaller banks to some degree. I know I've had that question asked of me. So if you're a smaller bank and you kind of don't know where to start, or you're not sure it's fits and starts, if you know folks at the larger super regionals or the bigger banks, don't hesitate to reach out. Say, hey, what are you guys doing? What path did you go down? Because for me, I was happy to answer those questions because it behooves me and my clients for those smaller banks as well to be in the network, because maybe some of my customers do business with a trading partner that does business at the smaller bank. So it just benefits, I think, everybody to be in the network.
Yep, and I think
And
that
95% of the FIs on the network are community and credit unions.
There you go.
So you're there. Come meet your peers.
Yeah.
And I think that sentiment, speaking on behalf of all the panelists here, I think that sentiment goes for any of us. If there's anything that we can do to help, if there are any questions that we can answer, if you think of a question after this, after this webinar, I know Jonathan posted our LinkedIn information in the chat. Please reach out. We're happy to answer any questions that you might have. No matter where you are in your real-time payments journey. Wayne, I don't see any additional.
Well,
Go
no, I
ahead.
want to thank everybody for being here. I want to thank the panelists. Thank you, CJ, Cheryl, Rich. Thank you for those who participated, who were here. Thank you. We look forward to posting our future events around payments. I think a good subject will be what happens build versus buy, because there are some on the call that are looking at build as opposed to purchase, buying a TS as far as the service is concerned. So that'll probably be our next topic. Thank you so much for being here, and we look forward to seeing you again.
Thank you, everyone.
Thank you. Thank you very much. I'll be back. I'll be in touch.
All right, bye-bye.